This is the euro dollar on the 60-minute time frame. This is a trade I've just got in live, and as usual I want to talk you through what the trade was and why I've got involved and where entry stops and targets are going to be. Just before I go ahead and do the top-down analysis, this was a trade I initially missed, and it wasn't until I've just been in Jason's tier 1 room that he brought this up, and I could see that it was a valid opportunity, although my entry was going to be a little lower, so I've actually waited for my entry down at the 382 and I've just got involved. So I bought the market, but this morning and yesterday I was looking at selling the market, and the trade played out very nicely. So I just want to briefly talk through this trade and what it was. This was a trade that I wasn't in, by the way, so let me just take off those orders. What we had here is we had an equal measured move, and we had a 127 and a 1618 up here. We had actually gone overbought at 85, and we had a structure zone at this level as well, looking left. Now I was waiting for a lower low, lower close. Unfortunately, the lower low, lower close did not happen till here, and there was no retracement for me to get involved, and I was looking at playing the market down to the 382, which we've just hit, and a potential continuation. Now that's played out. What Jason was looking at, and again I had missed this, but this is the great thing about the community here at Tier 1, and also about the live trading rooms. Jason had put on this trend line. Now I trade trend lines, and if I put a structure level in here, what had actually happened is we were in trend, so new structure high, outside return, new structure high, outside return, new structure high, and we had come back into the previous outside return. Now because I was looking at the AB equals CD pattern, I was waiting for the market to come lower to test the 382. We have just done that, and I'm being quite aggressive, to be honest, the same as Jason has been here, and the reason being is because this trend line has been tested once, twice, 3, 4, and this will be the 5th time. So anything more than 3 times for me I can take as major structure, and so I don't need any confluence. I don't need a higher high, higher close here, and with it being a trend line structure and also the structure point here, this is going to be an aggressive buy, considering that we're still in a bullish move as well. And I'm just going to drop down to the 15-minute time frame, and we do have a little bit more confluence here. It's not the best, but it is something else to go at. You can see that we've had a move lower, and from there what we've actually done is then trade sideways like this. Now this pattern typically breaks to the upside. You can even have it there because that's where the bottom of the wick is, and we do have some bearish divergence indicating that we could see a rotation to the upside. So the only problem for me on this particular trade was, where do I put my stops? Well, stops for me need to go underneath the 382, so if we go an ATR below the low, that's going to be 13. That's going to make this 42. In fact, I'm just going to bring back on the trade details. It's going to make 42. However, what that didn't do is, I don't think that gave me enough breathing room, and also if we look left, that comes in to the closes of these candles. Now whenever I see a structure zone like that, I see time and time again the market spiking down to test the candle bodies, not just the wicks. So I really want to be underneath that level, so I've gone an extra 10 pips below it. So that is giving me now a risk of this much, and I'm just going to make this red, and it gives me a reward of this much. I'm playing for a retest of the highs. I'm going to make that green, and so the risk on this trade is going to be very small. Well, 26 pips. It's going to be small in relation to the reward, and the reward is going to be 67. Now you can actually see that falling channel just here on the hourly. Obviously we're just consolidating, waiting for a reaction. Now we could follow straight through here and I lose my 26 pips, or we could rally up and hit targets. But we are in a trend here, and again this trend line has been respected. And if we look left, we can actually see that if I put in another structure level here that's been tested 4 times, you can actually see we still have room to come up for another test up at this zone. In actual fact, a little bit higher. So we haven't quite tested the tops of these. So for me, this is a valid trade, and we'll come back and see whether or not this will be a winner or a loser. And we're back on the euro dollar, and I wasn't able to record the maybe my stop being hit, but before I left I did move to break even. Now it's unusual that I would do anything like that in the middle of a trade, but there was a couple of signals and reasons why I did this, and the first one being is that the main trend line here was the main reason for getting involved within the trade, and if we were to violate that trend line, there was a good chance that we could see a rotation and could come lower. Now here at the tops, you can see that we had the 1700 even handled number, but we had not reached the very tops of these structure zones. So this was still an absolutely valid trade for trend continuation up to this zone. However, if we violated that trend line, that would be a signal for me that this trade could go on to lose. However, that by itself was not enough. The fact that we came and tested the 1700, that was a signal in itself. And then if I zoom in and look here, you can see that we had a very big pin bar followed by a lower low, lower close, and then we actually broke out the channel to the downside. So I actually got out of this trade for it was actually 0, so I would have lost what it cost to get in and out of the trade. And the reason I did that is just to give it a couple more pips, just in case it was just one of those that was going to stop me out and turn and hit targets. But there was one other piece of confluence as well as to why I moved to break even. And if we go to the 4 hourly, you can see that we had a bullish move, indecision, lower low, lower close, another lower low, lower close, and still we were bearish there. However, the other thing as well is that here on the 4 hourly, if I put a structure zone in at the close of those candles just here, you will notice that we have already come up to test that zone. And throughout the ridiculous number of months I spent back testing, I take my targets based on the 60. However, in circumstances when I know we're approaching the top or the very bottom of structure, then I can take targets based off the 4 hourly. And when I looked at this and saw that we'd come up and tested, all the candles were indicating a potential rotation, that is when I decided to move to break even. So there we go. I just wanted to share why I moved to break even on this trade, because it's unusual that I would do anything like that, because you can simply just leave to self-sabotaging, which I have done a huge amount of over the years, and it's certainly something I do not want to do again. But as my trading progresses and my experience within the market, particularly the back testing, and really analysing the candles, the market, and what happens as we approach structure and we run out of steam. And this was for me a no-brainer. So for all I know, the market just may turn around now and rally and hit targets, but I'm happy with my decision. I feel it was the right one based on my knowledge, experience, and what price action was telling me.